love the channel and find it useful in becoming a happy retiree. Subscribe today. Today we're talking investor versus saver. Huge difference between the two. We're going to discuss that today. Part of what prompted this discussion of whether you're a saver or an investor, this week in Barron's, there's an article. It's on page 16 if you happen to have Barron's, that says the title of this is From Capital with an O, C-A-P-I-T-O-L, to Capital, C-A-P-I-T-A-L. So basically from Washington to Wall Street. And there's a research company that I've been involved with for a long time, and Barron's happened to do an article about something that I've been talking about now for over 2 years, and that's the Strategas Research Partners, and really famous for their political research and how they are able to track and try to find outcomes for political outcomes by looking at different kinds of companies. So think of it, and you go back many, many years of when they started to develop this. Hey, let's take all the companies that would benefit from this new Republican policy that's on the docket, and let's track that versus a basket of companies that would benefit from a Democratic, let's call it, sweep in Congress. Let's take a look at an index that favors companies that have lots of money that could be repatriated or come back to the U.S. If this new law happens, we should start to see the companies that would really benefit from that creeping higher to give us an indication of where policy is headed. So it's a really fascinating way to do research because the markets sniff these things out before they happen. And what has come out of that over many years of putting these together, they effectively backed into finding a strategy that does really, really well relative to the market. And if you've listened to Money Matters for the last couple of years, you probably know where I'm headed, and that's towards the lobby index. The lobby index, which is effectively identifying companies that have they're tremendously smart about how they spend their money in Washington to influence policy. And they're the ones that are smart about effectively getting the most for the biggest bang for their lobbying buck, as how Barron's puts this. It can really weigh heavily to the upside on company earnings. So the companies that get this right have trounced the general stock market. And today, part of this conversation about being a good investor is maintaining an eye for opportunity and maintaining an eye for a brighter future. There's a lot of financial radio out there and their new newsletters galore that just can scare the devil out of you because there's a lot of scary things out there. It doesn't mean the overall environment we live in is terrible. Terrible pieces, but not a terrible environment. And if you pull out all the things that are going wrong and you focus on that, then you're never gonna go anywhere. You're never really gonna be an investor. You've got to take the totality of the economy that we live in, the totality of the economic system that we are in, the rule of law in the United States that is so powerful, yet nobody ever talks about how we do business here relative to the rest of the world, and just how much and how far that goes for building wealth in the United States. And you have to go no further than Buffett's annual letter this year. It shows very plainly on one piece of paper his rates of return for the S&P 500, rates of return for his holding company, if you will, finding good companies, finding companies that pay dividends that then that he reinvests those dividends. And it's the power of that over time is just enormous. And it really can't be overstated. And this is not hyperbole at all. These are just facts, and these are numbers. And if you go back to 1965, the S&P 500 is compounded to the end of 2017 at 9.9%. Phenomenal. That's a phenomenal rate of return if you've done that. That's 15,508% to be exact. If you've done this in a slightly better way, and I would say this is maybe even more a dramatically better way, and you've been an investor in something like Berkshire Hathaway, you would have experienced a 20.9% annual rate of return, which is just on the surface, 20%. Yeah, that happens in markets. In 2017, that's what the S&P did. It was up 21.9% total return. But to average that over a multi-decade period of time, you end up with just a tremendous rate of return. And there goes my coffee mug. I get so excited as I talk about this. The tremendous rate of return where you get 2.4 million % rate of return compounded over time. That's the per share market value of Berkshire from 1965 to 2017. 2,404,748% to be exact. And that is building wealth. That is building just enormous wealth. And why I'm talking about that today is because I'm reminded as I picked up my copy of Barron's this week, and they talk about how the lobby index this is the title of their article, Strategas Lobbying Index yields fat returns, because it has. And this is the kind of opportunity that I've talked about here. And I don't really jump up and down about rates of return, and you have to get in this because it's done better than that. I just want you to be an investor in something and stick with it. So if you look at this lobbying index, which is 50 companies, 50 companies out of the S&P 500 that are all the most intense and the most effective in how they do business in Washington, and it's really helped their companies. The article talks about how MasterCard has been in the index since February of 2009. We know that MasterCard basically is a duopoly along with Visa. And it's got a tremendously strong balance sheet, and it's had a spectacular run as a stock. And that's another example that really understands how to do business in Washington. Is they spend a lot of money and a lot of time protecting their turf as a company, whether it's on payment processing or it's on tax reform or it's on trade. These companies get it and know how to make sure that things go in their favor. There's a couple other companies that are mentioned in the article that do something similar and are effective in Washington. FedEx is one of those companies. Raytheon, the defense company, is another one. Vertex Pharmaceuticals, which I've written about as well. So I just tweeted this out. I don't do a ton on Twitter. I don't know how much our audience does Twitter, but just as a reminder, I wrote about this. I've written about this many times for the last quite frankly, for the last several years. So this is nothing new to Money Matters listeners. We're a couple years ahead. We're a couple years ahead of this Barron's article, but the title of this, and I'm going to go to Washington. Let's go Washington. And if you go to my website, just go to wesmoss.com, WESMOSS.com, and you search for Washington, you'll see under the Money tab, Washington's recent policy moves driving markets. And that is exactly talking about, so here's the title. When DC meets Wall Street. That's the title of the article. So if you go to wesmoss.com, it talks about this lobbying strategy. Now it's done as an index, which has beaten markets by almost 4% on average per year. 4% per average on year. That's enormous wealth building. So if you are a saver and the interest rates have gone up and that's a good thing for you, go to the bank, right? And have some money in CDs, and you're going to get 1.5% and 2% these days, which is great. It's much better than it's been over the last 8 years. If you want to be an investor, then I'm happy to have a conversation. I talk to new people every single day or every single week. I talk to new families who they want their money to do more for them. They have said, wait a minute, I want this money to actually work for me. And you can find a lot of information about that at my website, wesmoss.com. And there's an email button upper right-hand corner, and those emails come straight to me and my team, and I'm happy to schedule a time to chat about this. And the lobbying index as something that I've been very active in and invest in myself for many years now. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.